Welcome everybody to a gift breakdown on gold for the week of July 5th, 2020. Right now I'll be doing, so what we have today is I'm going to be doing a quick breakdown on gold, trying to shorten up from last time, as well as giving you insight on fundamentals and technicals, what to look for, key levels, etc. What I'm expecting. We're going to go from higher time frame to lower time frame, and then quick breakdown on other pairs as well. And then right after that, I'll be doing some simulations on another video, a couple days on gold. Maybe I'll do one gold, one GP CAD, GC, and then yeah, no Chan today. He was camping for the long weekend, so just a solo dolo today. But other than that, let's get started. I don't want to keep this video going for too long like it was last week, but do want to give you the key insights and everything onto gold. So first, actually, start off with the news headlines. Sunday, not trading. Monday morning, ISM non-manufacturing index, or non-manufacturing PMI. So that's a pretty big one. I mean, it's been beating expectations. This one's supposed to be 50. It's a month-over-month index. Basically gives a good indication of relative business conditions, including employment production. So it's a pretty big news for Monday. We'll see how it reacts. It's expected to be 50, which actually indicates industry expansion, because you see the past 2 months have been contraction. So if the trend continues, this should be higher, and we should see like somewhat of a recovery and more optimism in the market. Other than that, pretty low news week. PPI Friday, and that's about it for the news. So not a really big news week compared to last week. Last week was pretty hefty. Let's look at coronavirus, 11 million cases. So it's still there. Pretty sure this is gonna go higher for the States because it was July 4th weekend. But it ain't slowing down. Let's be honest. Look at the chart. Daily new cases on the rise, my friends. It's not going down at all. All right, so let's go to gold now. Actually, let's look at how gold's going to react. 3 months, April, May, June, all bullish months. Gold always has 3 months run up. It's at a pretty big resistance level here. Before it goes above 1800, it has a lot of contention around this area right here, right? So we're looking at that. That's a pretty big level. Tap 1. So tapped here November 2011, February 2012, September and October 2012 as well. So it's a pretty big area. When it breaks above here, you're clear here, then the wick fill. Me personally, I could see gold 500. Gold moves in waves, right? So you have this big wave up. I reset this chart, sorry. So yeah, let's look at gold. Okay, gold has a big wave up. Right, where does it hit on the retracement? 50% right here. So this move here to here is about $820, $830 from this move. And then you can expect another $830 move up here. So if it goes all the way to the top here, that's another 830 move. That's basically 50% retracement, 50% to the top. And if gold actually moves in waves from this point up here, you could expect 2,500, 2,600 over the long term. Now that is my long-term analysis. That is not the short-term at all, but I do expect it to go up there eventually. I'm overall bullish on gold. Gold moves in waves though. So you have this big recovery. Took months. It started happening pretty much during the trade war here. And when the trade war started, you can see gold's meaty, well, yeah, gold's rise up about 50%. So overall, it's bullish, obviously on the higher time frame, monthly time frame, but it's the start of the month, so you're gonna see some volatility, some like lower wicks down, etc. Let's look at the weekly. Weekly waves up. So this weekly, actually, I do expect it to have a pullback, kind of like how it did in June and in every month, really, right? It just has this pullback before continuing up. So I do expect a pullback. I do expect a month down, kind of a month of kind of not set buyers exhaustion, but just like buyers relief. The price is pretty high right now. Smart money institutions would want to buy lower. You see every bull move up, there is a mini sell-off before continuation. So this was the 08 crisis. You have a bull move up, initial sell-off, liquidity grab, bull move up, sell, bull move up, sell, bull move up, sell, bull, sell. So you're gonna get one of these red candlesticks eventually here. Like even here, 3 months up and down. So I'm gonna be wary of that, especially considering we're at a big resistance level right now. Based on the weekly we haven't tapped 1800. That's the one area I feel like we're gonna tap before selling off. It's still bullish, higher high, higher low on the weekly candlestick. It hasn't really had any chances to sell off particularly, so we'll see how that goes. 1 second. All right, sorry about that. I docked someone, but we're back in business. So weekly still bullish. Daily kind of this consolidation, pull back, liquidity grabs on these wicks, push up. And if I break it down on lower time frame, you can see what I'll see or what I'm trying to look for. Coming up next week, 4 hour here. Same thing, right? Just bullish all the way. If you go to the 4 hour here, same thing. It's just bullish all the way. This liquidity grab around this area. Straight bullish pressure all the way. Every time there's a sell off, there's a rip. So now let's go to the hour, and we're gonna go on this lower time frame. Trend's still up. Kind of pierced through the trend line here. Let me reset the chart. So if I did make this trend line continue, it's basically sitting on there, right? The trend is still up overall. Buys, easy and safe buys are going to be above 17, 78, 79. Test the highs and then go up to 1800. The Thursday and Friday candlestick kind of on the lower time frames formed this range, which is actually pretty nice. Gives us a good indication it'll be buys above the range it formed. Why is my line not working? So above this area or below this area, it's gonna be sells below here, buys above there. But we'll see. I'm gonna have a box actually on that range. All right, I'll just draw it eventually with arrows. But overall, still bullish. There has been no selling pressure to go down per se. Still a lot of optimism in the market. Economies can't really shut down, but there's still fear about coronavirus. I don't know how much it's going to affect it. Looking purely on a technical standpoint, it's bullish. There's no indication of selling yet. Like selling will come in waves. Selling will come like this, where you have to take profits real quick on the sells. This move on July 2nd, that was Thursday, I'm pretty sure. Yeah, Thursday. I think that was news driven. It sold off pretty hefty. Tapped into the support. So now this 1759, that's a big support. I consider sells below 1759 pretty reasonable. But right now, the immediate trade is going to be within this range. You have the 1778 level, 79 level. Buys above that, you're going to retest the highs. That's one thing I do expect. But now that's clearly defined for us for when we're trading, right? It's about anticipating what might happen, what other things can, like basically reading the chart, the candlestick, seeing potential moves, seeing what can happen, what can't happen, etc. What I'm noticing though is after a big sell, you have a big reversal, big sell, big reversal, big sell, big reversal up. So anytime there's a sell, it feels like smart money's buying it up again. But eventually you're gonna get a pretty big sell-off like the one in early June where it just sells in waves, right? Big sell and then a big sell. That's one thing I'm expecting that would happen. To what level, I don't know. It's obviously going to be playing within levels, within ranges, but you can see gold moves in waves, right? Move up, sell, move up, sell, move up, sell. Right now it broke out of the highs. It tapped into a new high at the end of last month. What day was that? Oh no, July 1st. Yeah, July 2nd, or end of June, and then even the first week of July it tapped into the new highs. So it's going to be interesting to watch it. For me, it's actually pretty easy. With more optimism and economies reopening, it's going to be a sell. Investors are going to flock out of safe havens, invest in other assets. But if there's more fear and pessimism in the market, combined with bad news data over the week, like with the ISM non-manufacturing PMI, if the industry is still in contraction, should expect gold to go up. But if the economy and there's signs of recovery, then we should see a sell-off in gold. It really depends how the news is on Monday. I will draw out what I'm exactly looking for. Right now, we have a pretty well-defined high from last week, 1789. The monthly made a new high for July as well. This weekly could be the weekly and the monthly wick formation, but as you can see in June, it can go lower too. So that's one thing I'll be wary. We've had 4 strong weeks up. So if next week is an exhaustion point, it could have another sell-off because you see after 4 like pretty solid bull weeks up, it usually does have a sell-off or like exhaustion. So this week I'll be playing both ways for sure. I'll have my strategy. My strategy is going to be the runner and the 20 pips. I'm not going to mess with my other strategies because they're not as effective. My most effective is a 20 pip plus the runner. So I'm going to stick with that one from now on and just perfect that strategy. And I'll explain that over the live streams throughout the week too. But now let's draw what I'm looking for. Let's get the arrows going. So easy buys above here. Actually, now I need to draw a line. What is that? 17. I'm gonna put 1789. Do we tap this in? No, I gotta put 88. Okay, so if I put one. The good thing is we have a clearly defined high right now, right? So that's one thing I like with gold. Once it has these clearly defined levels, it respects it quite a bit. There we go. That's the level I'm looking at. So let's draw it out. Buys above here. And then up here. That's nice. sorry, I was talking to someone, but okay, let me do this again. So we have this move up, test 1789. That's a good 100, let's say like an easy 50 pip move, get the 20 pips and then let the rest ride, right? I do want to make this range box though. We're gonna base it off the hour. So hour. What color can I make this? Style. What will look decent? Whoops. Okay, so that's the zone I'm looking at. Oh, let's make this a little bit smaller. So break above there, or we're gonna have a sell-off. If it breaks below this, you have your first target here. Your second target, the 65 level. Down here, 1751, 44, and then I consider it pretty steep down there. Whoops, I fixed that arrow again. And then obviously above 1760, we could see a consolidation at this point to continue higher as well. All right, hopefully that doesn't confuse a lot of people, but now let me write what I'm looking for. And then obviously below here, we could get pretty steep sells downwards. I mean, it's the same analysis as before, right? Nothing's really changed on that aspect. The safe sells are going to be between levels. So if I had to draw it level to level, or this level, whoops. Level to level, level to level. Good thing with gold, it always trades within levels, right? So it's basically the same analysis, right? It's gonna be buys above range created to test the highs from last week. Range created. And then above this area is going to be safe buys above previous weeks. More fear and concerns rising. Economy in contraction. With more fear in markets, pandemic concerns rising, economy in contraction, negative news data, and basically any concerns or pessimistic. Oh, I spelled that completely wrong. Sorry. Pessimistic outlook on the market / economies would indicate a rise in gold to test the 1800s level. So those are safe buys. The buys above the range would be created. And then we get the sells too. We could have sells on the pullback slash weekly wick formation lower slash weekly lower wick formation. Lower wick formation. Sells will be played between levels. Have the core position TP and let runner run based off market structure slash candlesticks on lower time frames. Holding on to sells is pretty tough. I tried it on Thursday, got absolutely killed. I mean, I really shouldn't have, and I did write that down. I was doing a quick reflection on that. But sells will be played between levels. This is a big if the price action finds support at a key level, then starts reversing. That is a solid indication to buy and hold for continued momentum upwards, combined with fear in the markets as well as economic contraction could see gold continue its bullish momentum. That's if it finds a support at level. If price action, oh shit. So if price action finds support at key level and starts reversing, that is a solid indication buy hold. Sells on pullback and then sells played between levels again. Sells only played between levels unless there is optimism in the market slash vaccination has been found slash any positive economy slash markets. If all these factors happen, then sells can be held. When there is optimism, there we go. Only play between levels. There we go. Buys I can hold, but sells only played between levels. So let me write the news here. News, ISM, manufacturing, PMI, 8 o'clock a.m. Monday. I6, 2020. And then we have Friday, July 10th. 20. Time was that PPI? $6:30 a.m. All right, so let me explain this completely, break it down fully for the last few minutes on the stream. So let's save that, take a picture of that, save image, put that on the side. Okay, we are good to go. So news, we have ISM non-manufacturing PMI, and then Friday we have PPI. So non-manufacturing, if industry is in contraction, then the price of gold should continue higher. If the industry is in expansion above 50 on that level, then that means the economy is recovering and we should see sell-offs in gold. So buys above the range creating from Thursday, Friday, test the highs. That's a possibility. The range is this area, the golden range, I'll call it. Let me put that down. The golden range. Oh no, I'll leave it. Sorry, I gotta do this so I can have it as my default when I create the box. Oh, that's too much. There we go. And then this should be, yeah, we good. All right, sorry. So buys above the range created from Thursday to Friday to test the highs. And then safe buys above previous week's high with more fear in the markets, pandemic concerns rising, economy in contraction, negative news data. Basically, any concerns or pessimistic outlook on the market. That economy would indicate gold rise. A rise in gold to test the 1800s level. Any buys above 1789, you have an easy 100 pip move on that. That'll be the safest buys. Any buys above this range, you're going to test this level up here. Sells on pullbacks / weekly lower wick formation. Sells will be played between levels. Have the core position TP and let runner run based on market structure candlesticks on lower time frames. If price action finds support at key level and starts reversing, that would be a solid indication to buy and hold for continuous momentum upwards. Combined with fear in the markets as well as economic contraction, could see gold continue its bullish momentum. All right, that's if it pulls back and then goes up. But hypothetically, let's say it goes up first. If the weekly candlestick starts going up, then I'd be looking for sales near the end of the week for pressure to go down. Sales will only be played between levels when there's optimism in the markets / vaccination has been found, such as any positive news for the economy / markets, which means if the economy and if the news data indicates that the US is in a expansion and the economy is recovering, then the sales will be played. There will be like investors and smart money will flock out of safe havens and put it back into the market. So it's pretty well defined. I mean, this range is really beautiful because you can see after like every range it has a quick move up and down and up. However you want to indicate it. Right here it was up and down. Right here it was down and up, and then down and up here, and then here down and up again. So gold does play like that, and I do expect it to have a move like that per se, but obviously we're gonna have to wait and see how this reacts. I have the picture taken, the video is up with everything that I'm looking for on gold, for example. So we'll wait and see on that. Now let's have a quick breakdown on these other pairs. So you have USD CAD. USD CAD has recovered from this oil driven rib, I guess, devaluation of the Canadian dollar. Canadian dollar has recovered with the price of oil recovering as well. Weekly, you have this bearish candlestick, found a resistance after the sell off. And if I draw a fib, that would probably be a level. No, it ain't a level. Oh no, I have to draw it from wick to wick in a sec. Wick to wick. It is the 50% level. Look at how that works. Huh? But it's found its retracement. It's created a bearish candle. Could see a move all the way down to 135 flat. That's a psychological level. With this bearish move down, that's still like 40 pips, 30 pips easily. Yeah, if you look on these lower time frames, it has no support until that price. Long term, I do expect it to get back into this 129, 131, 133 range. Get back pre-pandemic, pre-oil crash. That's the range I expect it to get back into on the monthly. Monthly has like a double top. Eventually, I do want to see it too, so it'll be better to travel to the States, but that'll be long term. Short term, we might have like a slower month. As you can see, after like a few months up or a few months down, it kind of just chills out, relaxes on the price. The short term, I do expect 135 to get hit this week. Maybe a wick fill on the monthly, maybe a test of the support at 134, but it'll be played based on price action, intraday price action, such as when it starts selling off, breaks a certain structure, a certain trend, starts to sell off, right? So any movement like that I'll be playing, or if it breaks certain buys, then you kind of play that, right? But it'll be an intraday thing. I'm gonna remove all my drawings. I like to keep these charts clean and kind of play it based off that. So when we go to Euro USD, Euro USD has recovered quite a bit on the monthly. On the weekly as well, you can see after this consolidation, bull move up, See all this rejection up here on the wicks, but last week was a bullish candlestick. Over here you have another, it's kind of in a range now. I guess July, kind of slower months. So we're going to be playing so the safest sells will be below this range, safest buys above this range. Right now you kind of have like a wedge forming here. So the buys will be played above here and then the sells will be played above here, but I could see the price kind of doing this kind of weird thing until it breaks a certain level or if it goes below a certain level. Let's click on Euro USD. On Pound USD, this one actually looks pretty sick. You have this resistance form. So this is a structure I was talking about. This is a bear structure with lower lows, lower highs. So here's a high, here's a lower high, lower low, lower low, lower high, lower low. This one's still a lower high. So anything above this level, you're gonna get safe buys here. But let's say it starts selling off with strength in US dollar, weakness in the pound, some Brexit concerns. You can see this one form somewhat of a lower high and then kind of sell off like that. So it'll be played between levels. I'll be watching it. Moves usually do happen during a London session, but you can catch like the second half of the move during the American session. If you look at Pound CAD too, you can see it's in a pretty massive range, if you ask me. It's in the middle of the range right now. So, I mean, if you were range trading based off the hour, you could play it up here or down here. But if I go to the higher time frames, you can see monthly. It's kind of, you had the 2 months on the sell off, so it's kind of recovering a little bit with the strength in the pound. Weekly is just the open doji style. Yeah, weekly is not really doing much right now. Daily, you kind of have the range too. 4 hour, big range, 1 hour range. But how I'll be playing it is obviously you see these buys when it breaks levels, or if it breaks out here, buys here. We caught this buy. I mean, I only caught it this much, but as you can see, it tested the top of the range. So it'll be again playing price action intraday, seeing how it moves, basically trading off that. So just in summary, the biggest analysis is this gold trade. I have a picture of it. As you can see, this is exactly what I'm looking for. Everything explained. If the optimism creeps back into the market, then we can see sells. If pessimism, fears, contraction goes back to the market, safe buys, test higher levels. Do expect 1800 spot to get hit. 1800 futures got hit, so that might be an indication. But biggest thing is Monday, depending on the PMI. If PMI is very good and positive, we could see continuous sell off and move away from safe havens. But yeah, if you like this breakdown, leave a like, comment, subscribe, support the channel. It's a growing stream. If you catch this video, let me know. If you want analysis on other pairs, shoot me a message on YouTube. I will be making social media handles in a few months, not right away. I kind of want to get the channel and the content out there first, and then go from there. But yeah, if you like that breakdown, please leave a like, comment, subscribe. Other than that, I will see you in about 30 minutes for a quick simulation. Now this outro play, but have a great break before the simulation.